One of the biggest challenges that we found with insurance companies looking at the changing regulatory landscape is the sheer volume and mass of regulations.
Having a strong regulatory radar to understand the regulatory change is very important.
Those firms who actually realise where tomorrow is going are actually best placed to really go forward and reduce their costs.
There are three key themes of regulation across the Asia-Pacific region. Solvency capital being the first one, risk and particularly group risk management being the second, and finally customer treatment or consumer protection. We would see a big opportunity for regulators and for companies in the region to use risk and capital reform to enhance their risk functions and provide management and particularly the board with more informed information to help them understand the risk profile of their insurance business across the market and therefore help them to make, we think, better and more informed decisions in terms of strategy across the region.
So within the wider Americas, what we're currently seeing is the development of the ORSA, or the Own Risk and Solvency Assessment Standard. This is a classic example of where domestic insurers need to be focused on what's happening at an international level. Within South and Central America, we see emerging regulatory frameworks. We see an emerging middle class. We see a stabilising economic environment, such as lower inflation rate levels. And as a consequence, insurance is becoming more attractive within those marketplaces.
EMA actually comprises Europe, Middle East and Africa, all having different starting positions effectively for their different reform processes. If you're in Western Europe effectively, then what you're really looking at now is not only the completion of Solvency II, but also the introduction possibly for the larger insurance groups of systemically relevant concepts coming through and what that might mean, particularly in the way of recovery and resolution plans. The Middle East and Africa, what you're actually seeing is a new process for supervisors in having to come up to the new international standards, and that actually requires a lot of industry assistance locally. So what they're looking to do is introduce risk-based capital frameworks, which, the introduction of ORSA and economic valuation type principles is actually quite a step change for not only those supervisors but also for those firms.
The regulatory environment is changing with all of these countries, and whilst the IAS seeks to bring some consistency to it, there are local differences and nuances.
It's very important for insurers to maintain and develop their regulatory relationships, to understand what's around the corner.
We've actually been policymakers at the either local or international level, and therefore we have real insights into what it is that the supervisors are actually thinking when they go through their own reform agenda. And so we can actually bring that insight and that experience into the discussions that we have, building innovative solutions for clients in terms of meeting some of these changes.
If you want to get ahead of the curve, actually take those ICPs, be proactive, assess your business model against those, and also look at the emerging consultations, such as the standards for internationally active insurance groups, the COM-frame that's currently under development.
There's certainly a competitive advantage for those firms who take the initiative and really get involved.